I just learned that, it's very, very hard to predict the future. And, none of us has like a fortune ball that you can look at and really know for sure. And, it's important to have like a broad vision to understand that, okay, if things are going to evolve this way, I want to be very well positioned, but also to look at shorter times, and especially as a startup, to let's say, 3 years from now. I'm Tomer Kashi, co-founder and CEO of VOOM, and this is the future of insurance.
Tomer, it's really good to sit down with you, and I'm excited to hear more about what VOOM is. But before that, tell us a little bit about you and your background, because this isn't right where you started in insurance, right? You've been in the space for a bit.
Oh yeah, okay. So thank you, Brian, first of all, for having me. It's a great pleasure to be here. I think that like many other InsurTech founders, my background is not really in insurance. I'm a computer scientist and physicist by trade that somehow fell in love with insurance. Actually, I met my co-founder Ori about 15 years ago or so, when we were both drafted to the Israeli army. Like in Israel, army is mandatory, and both of us were accepted to a very, very tiny military academic program called Talpiot. Think about it like, in American terms, it's like a merge between West Point Military Academy to like MIT Engineering and Harvard MBA all together. So out of, let's say, like 10,000 applicants, we got in like 50, we graduated 30.
Wow.
And in it, like we studied computer science and physics with the ambition to be like the R&D leaders of the defense forces.
Okay.
So we did that, and then we stayed for like almost a decade for the defense forces in different places. And both of us were like leaders of tech projects, like tech interdisciplinary projects that were like very, very interesting. I also always used to say that before pitching VC, I was pitching the prime minister. But sadly, although it's like 15 years ago, it's like the same prime minister today. But that's
a whole different discussion. Yeah.
In any case, where we're like finished our like, let's say, like mandatory tenure, we just like very naively said, okay, let's start a startup, even without a specific idea in place or any kind of concept in mind. Mainly, just because, a lot of other people in our corridor and, AJ rooms also, were released from the army, made a startup, became very rich. It sounds like a, very promising thing. And, they are very smart, but not that smart. Maybe I can do it as well. And it's not only for getting, let's say, wealthy, but also we want to have the challenge. And that's mainly... Fast forward to today, with many hops on the way, we created back then SkyWatch, which was a drone insurance product.
Yeah.
Evolved into VOOM.
Okay, so that's where I was thinking you had been in insurance before with SkyWatch, but they're intertwined. Is that a fair way to say it?
Yes.
So I want to focus on VOOM, but what was SkyWatch? Was it because you were a drone pilot for the IDF?
I'm licensed by the FAA to fly drones commercially, but that's actually mainly in order for us to know our customers better. So it's the founding story of the company SkyWatch, then VOOM, I think is one very interesting and also very relevant to how the insurance ecosystem works in general.
Yeah.
So when Ori and I, founded the company, we wanted to do something in drones, not in insurance at all. And we created like, a best of breed risk assessment platform for drones. What's the chance for a drone to crash, and what would be the severity, and so on and so forth. And we actually wanted to sell it to enterprise, but there were like not enough enterprises back then that were interested in such a thing. Yeah. However, when we pitched it to insurance companies, they were like amazed. Oh wow, that's great. Let's do something together. And then we tried to sell them the technology, our risk score for drones, and the problem was their IT. Okay, so you meet with them. We came with t-shirts and laptops. They came with suits and cufflinks. We
Yeah.
try to sell this risk score, and but we can't really feed it into our systems in order to create any kind of policy.
Yeah.
Why don't we, the insurance company, will back you up, and you will become the MGA. Little did we know, of course, we said yes, of course.
Yeah.
Doesn't sound like a problem. Fast forward to today, our brand SkyWatch is the largest commercial drone insurance provider in North America.
Oh.
So it became widely successful, I would say, in a relatively small market.
Sure.
We grew organically quite well, and actually this year we also acquired a competitor, another startup called droneinsurance.com, and we became quite big in that. And just like to take it like one step further,
Yeah.
After we did it quite well, we understood that this problem of these insurers in drones actually is not bound only to like one specific niche. Each and every time that you have like a niche category, a lot of insurers are really struggling to innovate in it.
Yeah.
And think of, okay, let's find this new category, build for an innovative insurance product in it, and really delight the customers, can repeat itself again, again. And since then, we just have identified several, I would say, like niches or like specialty lines within the mobility category, and again created a product that is tailored to this niche.
And is that because you had built sort of the platform or the approach when you were building SkyWatch, and that then becomes something that you can extend to other applications?
Exactly. So yeah, we have something that internally we call the VOOM core, which is in essence, I think, has three pillars. One is like the risk analytics, the ability to take telematics data, contextual data, and provide some kind of a safety understanding or risk understanding. The other thing is a born in the cloud policy administration system that we built from scratch. Like many other insurtechs in the world, we didn't reinvent the wheel there, but like Lemonade has it, Hippo has it, Next, VOOM as well. And distribution. So we have like all of the tools for direct distribution, agent distribution, mobile distribution, embedded distribution. And it allows us, I think, to create a new product in a matter of months instead of in a matter of years. When you switch hats and you think about yourself as like a CEO in a large insurance company, insurance is hard, innovation is hard. Insurance innovation is very hard, but product innovation is probably the toughest of problems because it's very interdisciplinary. You have the product guys and the IT guys and compliance, and you have channel conflicts. So if I were, let's say, the CEO of Allstate, Progressive, many others, it makes sense for me to innovate in major lines, such as home insurance, car insurance, maybe small business insurance. But there are many other segments that are just like overlooked because it's as hard to innovate, but the price is much smaller.
And they're irrelevant when you're at that scale. You can't spend the same effort for a $20 million opportunity.
And again, it's like, and sometimes it's it's an opportunity of billions of dollars. Okay, so one of our products, motorcycles, it's like a $3 to $5 billion market in the US. And it's not only that the segment is overlooked, the customer is overlooked, right? And that's basically our mission, to create the next generation of insurance products for mobility, targeting specialty segments first.
So mobility is a word that gets tossed around a lot. What does that mean from your perspective? And maybe there's a today version of that. And then I imagine all the talk about the future of mobility. How do you think about the space sort of transitioning over time and how you respond to that? Because this is a conversation I've had. A partner at McKinsey was on the show talking about this in particular, that they see the way the industry currently addresses mobility is effectively just selling the same thing that was designed, in the 40s, 50s, 60s. It hasn't really understood that the exposures are completely different. The usage is different. So I imagine if you're starting much later than the 1950s, you'd have the ability to rethink, well, what is mobility, but also what's the dynamicism is in it, and how do we plan for that? So I'd be curious your take.
Yeah, that's a really good question. So I will talk first about the trends that we modestly see in the mobility world and the opportunities I think there are in general, and then I can actually speak about the specific products that we already created.
Yeah.
That I think goes very well with these opportunities. So one thing is new platforms. Okay, so not only cars, but you have today drones, e-scooters, some delivery dedicated vehicles, and so on and so forth. So that's like one thing that a new platform that you need to ensure.
Yeah.
Other thing is increased connectivity. Okay, so and I think it opens opportunities both in underwriting and in distribution, right? So that's another opportunity I think is huge. And the third one is new types of utilization. So not only car ownership, but also car share, ride share, and many others.
Yeah.
And actually for each and every category, we already have a product. So with regards to new platforms, so we have drones. Okay, so again, we're like the largest insurance provider for drones in North America, under another brand called SkyWatch. Increased connectivity. So for example, we are the only provider of pay per mile insurance for the motorcycle segment. Okay.
I didn't even know there was anyone doing that.
Yeah. So think about it, like 70% of the riders ride less than average.
Yeah.
Okay. They are overpaying for the 30% that have a lot of time to ride. Unfortunately, I'm not one of them. I don't have a lot of time. And in many cases, and I think about certain states in which you can't really ride for 8 months of the year.
Yeah.
So VOOM has created the only pay-per-mile insurance for motorcycles. Again, taking advantage of the fact that things are much more connected, so we can collect the mileage of the motorcycles much easier.
So now I want to ask, like, how do you actually do that? Do they have is it a dongle? Is it? But that's probably getting too specific.
Yeah,
but
we'll open brackets in a second.
Yeah, but that's a really interesting point. And I'll let you go on, but because I think so many people have a motorcycle as a sort of pleasure craft. It would be like I don't own a jet ski, but if I owned a jet ski and it sat dormant most of the year, why am I paying to cover something sitting? And I suppose like the shed could fall on it or something, but it's not out in the sense of its true exposure, but you pay for that. And I don't know that that's really ever been contemplated. And yet it sounds really obvious once you've said it. So that's fascinating.
But again, think about it from the insurance company perspective. There are dozens of insurance companies that are doing, let's say, car insurance. How many have pay-per-mile insurance? Not that many. There are some, but not that many, because it's like very hard to innovate. And many of them don't even get to innovation in car insurance or in home insurance. So let alone in the smaller niche of multiple $1 billion of motorcycles. But then again, like around 10 million motorcycle riders in the US, none of them have a proper solution. What we're trying to solve for. The third thing that I talked about is new types of utilization, car share, ride share, delivery, and others. There actually, we just like a few weeks ago launched a new product. It's an auto insurance product for drivers that are using their car mainly for ride share and delivery. Okay. It's a very like technical explanation of the product, but think about it, if you're like an Uber rider, an Uber driver, when you're on Uber already like covers you for the most part. Okay, so when you're like on the way to a passenger or with a passenger in the car and so on and so forth. So if you're a full-time driver, okay, you do not commute to work, right? As soon as you're out of home, driving is your work.
Yeah.
And you don't go to like long trips over the weekend because you're tired of driving, or you're working on the weekends. So actually, from a mileage exposure perspective, many of them could be great risks. Okay, and again, we're providing a pay-per-mile insurance solution for these drivers to cover them only for the off-the-clock mileage.
So how do you deliver the off-the-clock logic then? Do you connect into the various platforms that they're using to know when they weren't driving for the platform? It's sort of the inverse of what the platform would be measuring.
Exactly. So let me explain how the motorcycle product
Yeah.
work. And then I think that the rideshare and delivery product is like, the next generation of that. Okay.
Okay.
So, if you're like a motorcycle rider, you go to VOOMinsurance.com, you go to our website, get a quote, you have some kind of a base coverage, again, to cover your car at the garage,
Yep.
then a paper mile rate. The way we collect the mileage is just by a picture of the odometer.
Oh,
So once every let's say year or quarter or billing period, according to what you decide, you get a text message from VOOM. You press on a link, you take a picture, we analyze it, and we know how much you will ride. As simple as that. Okay. And again, like many drivers save this way. Just as an anecdote, when we launched the product, we reached out to all of the publications in the market. There is like motorcycle.com and Cycle News and many others. One
yeah.
of them, the editor-in-chief of Cycle News, liked the product so much, so it just became a customer. It's like he's
Right.
like, oh, that's just for me. I'm I'm
Yeah.
riding only 1,000 miles a year. Let's go for it. So that's like the motorcycle product. Now in rideshare and delivery, we connect on the customers' consent to the customer's Uber, Lyft, DoorDash, Amazon Flex account.
Yep.
We know their exact trip data, and also other data that is really helpful for underwriting. And according to that, we know what kind of mileage to deduct from their overall rate.
Okay. Yeah.
So
You're still billing annually, right?
we're still billing annually.
Okay.
But we know how to rate you much better because
Yeah.
it's not that we're smarter than any other insurance companies. Okay, so our actuaries are not smarter actuaries than the actuaries at Progressive. But what we do have is data that others are blind to. They just don't get an access to this data. And what I learned is that in a machine learning problem, the most important thing is the data that you train on,
Yeah.
more than the weights of the model. And this is something that I think is really helpful for us.
I'm struck by the simplicity of it because every motor or auto insurance that I've had to report my odometer reads to them. Actually, they want to know how many miles I drove every year, and they want the starting and ending odometer number. I'm always like, why can't you use the form I sent you last year? Why do I have to try to figure out what the mileage was last year? So you solve for that, but this is something, what you're requesting is something people generally have to do anyway, or maybe it's just because I've said like we don't drive that much, so I put in a lower mileage number and I get a discount for that. So they're sort of verifying it, but this mechanism already exists. So I'm trying to understand, like, you've simplified the process for the customer. And because you're not doing this I thought you were going to say like every month we send them a text and ask them to give us the odometer read and readjust their rate accordingly. But that then creates the other problem people have with pay per mile is the uncertainty about what they're paying until it's too late.
Too much of
So
a hassle.
yeah, it's interesting because it's not wildly different from things we're doing anyway. But I imagine most of those forms I send back just get ignored, or they're like, yeah, he's within the threshold, do away with the form. They're not doing anything with the information. So you're saying they're blind to it, but they don't have to be. They're choosing to be, which is fascinating.
That's another
Yeah,
problem. I think that you in many cases you need to tackle the problem in I would say broad perspective and look at it as an interdisciplinary problem. Okay, so sometimes one silo gets the data, but the other one doesn't want to do anything. And in
right,
many cases, especially with established insurance companies, they don't want to provide discounts to some that will cannibalize their portfolio.
right. Yeah,
If I'm an established, motorcycle insurance provider, why should I, discount 70% of the riders
right,
and the others won't pay more?
right. Yeah, they've
So
just been subsidizing them,
yeah,
in ignorance, and it's worked out for us so far. So why change?
exactly.
Uh,
So, and that's, I think, again, a unique advantage that a startup has. Most of the startups, they don't have advantages. Okay, the other big players, they have more data, more money. They have a lot of things that startups don't have.
Yeah.
But I think that there are a few advantages that startups do have over incumbents.
Yeah.
One of them is, okay, the ability to move fast. But the other thing is like no legacy and no book, no existing portfolio that you are afraid of losing or changing
Right.
things in.
Right.
So
Fewer
all you
constraints.
have in mind is what does the customer want to have.
Yeah. I'm curious, given the three ways that you think about mobility, and I think it's an interesting way of framing it. As all the talk we hear is like you're going to go from one modality to the next, and it'll be very fluid. What mobility means is not just I drive the car that I own that sits in a garage most of the time, or motorcycle that I use every now and then on the weekend. Um, what's your sort of outlook on that, and how do you think we respond then from a coverage standpoint, where it's not I need 7 different like mobility policies to cover all the ways I move? Do you agree with this notion that there will be sort of a unifying into a single way to cover someone, or maybe it's a couple of ways around their mobility more broadly?
A very interesting question, and frankly, I do not know. Okay, so I think that it's like there are some things that are beyond the, I would say, like business horizon, that are, I would say, like beyond 5 to 10 years from now. So yes, like just for like cars are going to be fully autonomous, okay, and then or like gradually more and more autonomous. So what are you covering it all? Okay,
Yeah.
uh, uh, and people are going to own less and less.
Yeah.
I think that regardless of autonomy, there are some, I would say, like pleasure vehicles that for sure would continue to be insured. Okay, so take motorcycles, for example. Most people don't ride it to commute to work. Most people
Yeah.
ride it. Same for boats. Same for RVs. I don't know, depending, because you want to enjoy your home. But there are some things that I would say like are like technology proof.
Yeah.
And there are some emerging opportunities. So today we're seeing like more and more fleets that were established in order not to rent a car to like usual Joes, to rent the cars to Uber and Lyft drivers. Okay.
Right. Yeah.
So they demand special insurance solution as well. You see interesting models such as Turo and others. Again, they demand interesting models, and the people that rent their cars to Turo also demand an interesting and tailored insurance solution for them.
Yeah.
So the opportunities are endless. Not everything we're able to do at once, but I think that there are many interesting opportunities and ways to help customers.
No, I think that's an honest answer. I think people are always like pushed to give some big, it's all going to come together as one, and we're the only ones positioned to be able to solve that. I think we don't know the timing, and every report that comes out and says by this time in 3 years everything, it's not going to happen. We would all be in flying autonomous pods by now if all those predictions were right. So I agree with you. There's some horizon, who knows where it is, and we don't quite know what it'll look like. But I think these are dynamics that are worth considering, including I don't know that anyone's going to buy an autonomous motorcycle to go just sit there while it drives around on the weekend. I think it's missing the point of what that vehicle is.
I agree, and especially as someone that built his company on the premise of the commercial drone insurance market to be, hundreds of billions of dollars in worth based on a McKinsey report. I'm now, and became, the largest in what he have done, but still in a relatively small market because I just learned that, it's very, very hard to predict the future. And none of us has like a fortune ball that you can look at and really know for sure. And it's important to have like a broad vision to understand that, okay, if things are going to evolve this way, I want to be very well positioned, but also to look at shorter times, and especially as a startup, to let's say 3 years from now.
Yeah, Tomer, this is fascinating, and I appreciate the perspective, given that you're You're pushing in a space that is the focus of a lot of these like major, kind of reinvention discussions. And there are a lot of reports out that I think it's pretty easy to prove most of them wrong, except for the ones that are still predicting out in the future. We don't know yet, but they're probably wrong too, at least the time. But it's fascinating.
They'll be wrong in the future.
Yeah. Yeah. But yeah, Tomer, is there anything else that you want to raise before we go?
So a few things. One thing I think is, about the future in general. So besides, how the mobility ecosystem is moving, I think that, one major change that we're seeing right now, and, it would sound like a cliche, but it's like AI and Gen AI. I think that the main beneficiaries from it are not AI companies, are actually labor-intensive companies such as insurers, finance companies that can automate a lot of the things they're doing across the entire value chain, sales, servicing, underwriting, and many other aspects. I think that in this case, just like as the CEO of NVIDIA said, you either get the food or be the food. You need to run fast. So again, I think it's a huge opportunity, especially for InsurTechs, to do the same, but much more efficiently. So this is something that is a major focus point for us at VOOM, besides product innovation, and that's about it.
No, that's great. I really appreciate the time today, and it's an exciting space. And we don't know what it's going to be in 5 years or 10 years, but it's clearly moving, and there's some really interesting things happening. So it's great to spend some time with you.
Brian, I really enjoyed the call.
Thank you to Tomer for sitting down and sharing a bit of the journey of VOOM, but also SkyWatch before that or alongside of that. And it's interesting for me. I've been reflecting on this since our conversation around this notion that there are some things that are, truly like innovative shift, new way of looking at it. And obviously the VOOM core, there's technology behind what they're doing, but then there's some basic decisions that they've made around things that sort of already exist that we as an industry haven't been taking advantage of. So, that's when I brought up this notion that we're already providing the odometer reads or the mileage driven over the year to most auto insurers. I've gotten asked that from every auto insurer I've ever been with. Every year they send me a form. It's kind of annoying. And I always wish that I could say like, well, you had last year's number. Can I just give you the current number and you do the math? But then I realized they're not storing that. They're not using that. And mileage is in the rating model. So why isn't that being used? And it just has me scratching my head that there are a lot of things that we do and that we don't do in this industry that don't have to be that way. And I think it's an interesting reminder hearing VOOM's story for all of us, whether we're at a startup, an incumbent, or someone around the two, to think about, are we actually creating our own constraints or missing out on our own opportunities effectively for no reason? We have all of the assets and the capabilities that we need. We've just chosen not to put them to good use in new ways that people are starting to look to that could be beneficial. I think it's a really interesting challenge, and I'd love for all of you to take that in and think about it. And maybe that's a comment you share. If you follow the show, hint, hint, you can share those comments in the posts you see on LinkedIn, or maybe if you're watching this on YouTube, or if you're listening on whatever platform, Spotify, Apple Podcasts, etc., share those thoughts. I would love to start engaging in some of these questions with all of you. So that's a nice reminder to follow the show and subscribe and all that. But more importantly, engage. Let's all engage with each other. And with me, I want to get into this conversation more. So thank you, a big thank you to Tomer for the time he gave and frankly, sparking these thoughts for me and hopefully for all of you. And I will see you back here next time. Thanks, everyone.